Nicole from Perfect Choice Properties. I have Mary Sullivan with me from St. Mary's Bank today, and we're going to talk about portfolio loans. Mary, if you could introduce portfolio loans.
Sure, I'm Mary Sullivan. I am with St. Mary's Bank, and we are actually the nation's first credit union. And yes, we are one of the top lenders in New Hampshire, and one of the interesting things that we bring to the table is portfolio lending. And not every lender does that. We are unique in that aspect of the market.
Now, when I hear portfolio loan, I don't think of necessarily even home buying. Mm-hmm. So can you explain what a portfolio loan is?
Sure. So we're all accustomed to the fixed rate cookie cutter conventional loans. And those are loans that every mortgage lender can offer. And you have to meet certain criteria, the borrowers do, as does the property itself. Well, not every borrower, or property meets those cookie cutter guidelines. So you often need a lender who can work outside the box, if you will, to meet the needs of those particular borrowers or properties. And that's where we come in what's called a portfolio program. So in addition to offering all the other fixed rate products, the New Hampshire housing, the VA loans, FHA, we offer what's called portfolio lending. And what it really means is we keep it in-house in our portfolio. And as a result, it allows us to, again, meet the needs of those particular clients, members that are out there that need those services.
So what kind of buyer or borrower would tap into a program such as a portfolio loan with you? What would be their reason behind it?
It may be someone who is purchasing a condominium, for example, that has a higher ratio of investors who own in there. It may be a condex, which again is something that most 30-year fixed rate programs, you can't get the traditional 30-year fixed rate financing. There may be borrowers who have only been at their job a certain amount of time and don't meet some of the criteria for job stability. So there are a number of different reasons why someone may find the need to go with a portfolio product, and it may just be an option that people prefer that type of program.
That's great to know, because condexes are something that comes up often with some of our clients, and it's a challenge to find financing for them. And with a lot of first-time buyers too, not being able to qualify with FHA for something like that, that's a great backup program to have. Any other interesting features? I know you said it is not a fixed rate. What would that look like?
Yeah. So because we retain that in our portfolio, so the bank holds on to that mortgage for the 30-year term. As a result of that, most portfolio programs in general you'll find are adjustable rate programs, also known as ARM. We love the acronyms in this business. So an adjustable rate mortgage, for example, a lot of our programs are based around a 10-1 ARM or 7-1 ARM. And what that means is for the first 10 years of the program, you are locked in to that fixed rate. On year 11 and each year thereafter, that rate is subject to change based off of the initial rate, and there are caps put in when those changes start occurring. So caps is another term that you'll hear. Our caps are 2/6. So on that 10-year 10-1 ARM, you may start out with 2.65 on a rate, and on year 11 it could go up no more than 2% over the prior rate, and no more than 2% in any single rate change, up or down, with a cap of 6%, meaning over the life of the loan, that rate can never go up 6% higher than what your initial 2.65% was. So that gets into a little background on what an adjustable rate mortgage is. They're often priced lower than market pricing on a 30-year fixed rate. And so that makes it attractive. We do have a couple of products that really stand out too for our portfolio programs.
Awesome. Well, I think it's definitely something we should explore more. Mary, thank you so much for all the information on the ARM and the portfolio. I think we will talk some more.
Thank you, Nicole. I appreciate it.